Dumb money investors are about to get crushed again in the stock market. Where are the dumb money traders right now? Are they in a bullish move, or are they still short this market without any indication? We are talking about the human psychology of the market right now. This will be a good one. Stay tuned. And of course, smash the like button. So welcome back everyone to my Audacious Witch channel, where we talk about stocks and bonds and commodity markets. If you like any of these markets, consider subscribing, and of course smash the like button. And of course, smash the like button, and please subscribe to my channel if you enjoyed today's video. So let's begin talking about the market psychology, dumb money versus smart money. A lot of times when you want to buy the fear and selling the greed, and we are at that point, at the dumb money confidence indicator, we just reach 0.6 reading as we looked at the history data. A monster spike of dumb money soon after we get a big fall in the stock market. Over here we have a spike of dumb money. We get a pullback. So this indicator can be quite good and to figure this out. In January 4th, we got a spike. You know what happens next. The stock market fell down and it continues to fall down, and we'll get the second spike of dumb money. That was in the beginning of April. Most recently, in August 1st, we hit a new high spike of dumb money at 0.6. So we started to rally, and the rally continues, and everyone and their mother is convinced that the bottom is in. Let's talk about the retail shorts of the market. Notice the shorts have declined heavily as the rally continues. We saw some big short spikes over here. When the stocks are getting crushed, then we have big spike of shorts. Right now on the low. Now we are rallying. Shorts are falling off the cliff. Maybe now it's time to short. Maybe. I am not shorting. I am just waiting at the moment. This is another sign that this rally may be getting closer to the end, and we are about to have a reversal. Why is that? Look at the sentiment votes at AAII. We just got at week ending of August 3rd. 38.9% of the investors are bearish, way less than a couple weeks or a month ago. More than 30% of all the investors are bulls now. This is getting closer to the normal market sentiment. Look at June 1st readings. Over 32% of investors are bullish. Then we crashed hard after that. Now look at March 30th, when only 27.5% of the investors are bearish. The market went down after that too. Now we look at today's non-farm payroll report. The U.S. added 528,000 jobs in July, showing a booming labor market despite recession fears. A now hiring sign displayed in the window of Manhattan on July 28, 2022 in New York City. The U.S. added 528,000 jobs in July, exceeding the median estimate of 250,000 new payrolls. The unemployment rate fell to 3.5%, landing below the 3.6 forecast. The report shows job creation rebounding despite rising interest rates and slower growth. Job creation surged past economists' forecasts in July as labor market strength overpowered higher interest rates and elevated inflation. The U.S. economy added 528,000 non-farm payrolls last month. The Bureau of Labor Statistics announced Friday economists surveyed by Bloomberg anticipated a gain of 250,000 payrolls. The print shows job growth rebounding from the month prior as labor demand held steady through the summer. The June increase was updated to 390,000 payrolls from 372,000. The May count was revised to the final count of 386,000, up from the prior total of 384,000 jobs. Overall, employment now sits above the levels seen just before the pandemic hit. Several sectors, including the government, have yet to fully rebound, but changes to the economy and how Americans work will likely have a lasting effect on the labor market's makeup. The unemployment rate fell to 3.5% according to the report that came in below the median economist's forecast of 3.6% and matched the 5-decade low seen before the pandemic. If you thought the economy was in a recession, you were wrong. John Lear, chief economist at Morning Consult, said paired with falling gas prices and the economy outlook for the third quarter starts to look better. Leisure and hospitality once again led the way in job growth with an increase of 96,000 jobs. Within that sector, restaurants and bars counted for 74,000 new payrolls. Employment in the sector is still down roughly 1.2 million payrolls from the pre-crisis levels, but the past several months suggest businesses will continue to add jobs the fastest. Professional and business services followed with 89,000 payroll gain. Healthcare firms created 70,000 jobs, and the government added 57,000 new payrolls. Clothing and accessory stores posted the largest drop in employment, shedding 5,200 jobs through the month. Some sectors saw hiring largely unchanged through that month, and the majority posted healthy gains. The July report snaps a month-long trend of moderately slowing job growth. The pace of hiring has been unusually fast throughout 2022 as companies' healthy demand for workers overshadowed hurdles like the Federal Reserve's rate hikes and persistently rising prices. Job openings data for June suggested that labor demands could be slowing down, but with overall openings still above 10 million and nearly doubling the number of available workers. The economy will likely keep adding payrolls throughout the near term. Other measures included in the report were similarly encouraging. Average hour earnings climbed to 0.15 or 0.5% to $32.27 in July, beating the estimate of 0.3 increase. The upstick offers some relief to Americans shouldering the weight of sky-high inflation. The inflation problem has left most workers with negative real wage growth, which means their pay isn't climbing fast enough to keep up with rising prices. Through the July gain on its own won't flip the script. It signals workers that are still winning historically large pay gains. Labor force participation, however, continues to trend in the wrong direction. The rate, which tracks the share of Americans either working or actively looking for work, slid 62.1% from 62.2%, marking the second straight decline. With the labor market still extraordinarily tight and some 58 million Americans not in the workforce, it will take a healthy rally in participation for labor supply to balance out with companies' massive demand. The economic backdrop, however, is getting more difficult. The Fed raised rates by 0.75 percentage points in late July, matching the size of its June hike, and pushing the federal funds rate to a range of 2.25% to 2.5%. That range is broadly viewed as neutral by Fed officials, meaning it neither stimulates nor restricts the economy. That means borrowing costs are no longer at the low levels that supported companies over the past 2 years. The strong July figures leave the door open for Feds to keep raising rates at an aggressive pace. The central bank has targeted the labor market as an area where it can cool demand, and officials have repeatedly pointed to the wage growth as an area of potential concern. The larger than expected increases in wage and overall payrolls signal the Fed will keep pushing rates higher in hopes of balancing out the labor market. Not only is the labor market undoubtedly still tight, but wage growth is uncomfortably strong. Seema Shea, chief global strategist at Principal Global Investors, said that the Fed has its work cut out for it to create sufficient lag that could ease price pressures. So the reason why today we opened gap down is because of this report. this non-farm payroll report showing the market that the Fed needs to be more hawkish towards the stock market and raise the higher rate to cool this economy down. So this is good news. It turns out to be bad news for the market. This bear market is not over yet. If you're looking to make more money in these uncertain times, why not write a book? I am a best-selling author, and I'm here to help you write and publish books. You should start today to write your first book. It's never too late to actually start a new hobby or a new career choice for yourself. I believe everyone has an artist within themselves, and my job is to help you find that artist within you. So I'm just going to actually show you a few of my books and my client's book too. So I'm going to actually share the link with you so you can order a copy. So Wicked Pussy Perfume by Teddy Eazzy. It's an erotic novel series that he's doing. And I'm really excited to see the next novel and to publish it for him, to see actually what cover is going to go on. And so it's all about these preparations when you do become a writer. And the cover is like crucial for the sales and for also for people to notice your product. So it's just so important. The cover is so important, and he picked an amazing cover here. So I'm excited to see the next cover for the second novel. He's already got it on the go. So my clients work fast. And it helps by getting motivated by someone like a good coach like myself. So when you do have that support, it's easy for you to succeed. And first the energy has to come within yourself. It has to come from within. With everything we do, whether it's investing, trading, whether it's writing a book for yourself, it has to come from within yourself. You can get motivational coaching from someone. You can pay all this money out to get it, but it has to come within you, and also to get a good coach. So both of those are hand in hand pretty much. So you need a good coach, but you need a good mindset and good energy level for yourself. And I'm not talking about from coffee. I'm talking about the kind that comes from within, from getting a good sleep, from having a clear mindset, and from having clear goals for yourself each day, to know where you're headed for the next day, to have a game plan pretty much. So I'm going to actually show you another one. It's called Mystic Falls, Build Yourself a Legacy. And the reason why I picked this is because we all need to build ourselves a legacy. It's very crucial, especially in these trying times, the way it's uncertain and everything in the world. Are you building yourself a legacy? Ask yourself that question today. What is your legacy? What are you going to do to build yourself a legacy? And that is my Mystic Falls. I will share the link with this one too, so you can order yourself a copy. And I'm going to show you one more of my books, Galaxy of Dreams with Amazing Tiger Focus. This one, if we do not have focus on what we are doing, our investing and trading platform, or our writing platform, or whatever we are looking at achieving, we need to have the amazing tiger focus. It is very, very important to have that focus. This is why I picked this name. So tiger focus. A tiger always has perfect focus. When they are in the jungle and you actually see them on the movie channel, or you see them right in the jungle, okay, they have amazing tiger focus, and they know what they are doing for the day. They know their next move. So we can learn a lot from tigers. Tigers are so amazing. And this is why I picked the tiger for this one book of mine. I will share the link for that one too. So I hope you've enjoyed my video. I thank you for watching. And please like and subscribe, like my video and subscribe to my channel. I really appreciate all the people that have viewed my video so far on my channel. I thank you so much. I appreciate all the support I'm getting. Bye, everyone.